on, you guys? I want to welcome you back to my channel. And with this particular strategy, I promise you guys, this one is like, I promise you, this is like the secret sauce. This is definitely going to be a banger for you guys. So with this strategy, we're going to break it down all the way from the daily time frame down to the 1 minute where we get you guys sniper entries and you can maximize your profits. All right, so stay tuned. All right, you guys, welcome back. So in this strategy, we're going to break it down from step by step, starting with the daily time frame. Now, one of the things I want you guys to understand with this strategy is it could take a while for this strategy to play out since we're starting on the daily time frame. However, if you're looking at the different pairs in which you're trading and things of that nature, if you see this setup, you are already 50% of the way and you can start looking at the market for this particular strategy. Okay, so if we're starting with the daily time frame, the first step says identify the trend and wait for a break of structure. So if we're looking at this particular pair on G-Chef, we can see that we got a lower high, lower low, lower high, lower low, lower high, lower low. And from here, we can see that price has broken this last lower high, giving us a break of structure. So what we want to do, we want to go ahead and mark that to make sure that we know exactly where we are within the market at every time. So from there, it says we want to wait for a pullback, then use our Fibs to determine a 50% or more retracement. Okay, so we want to take our Fibonacci tool and we want to take it from the swing low to the swing high. All right, so with this particular Fibonacci tool, anything in red is considered as retail pricing, and we don't want to look for any type of entries or anything off of that time frame. Anything in the yellow or golden area, we call this our golden zone, and that's what we want to look at. Anything 50% or more, this is where premium pricing is. So in this area, we're looking at institutional trading, and that's what we want to be. Okay, so our next step says drop to the 4-hour time frame. Okay, now, so we're on the 4-hour time frame, and it says find your point of interest, which is an imbalance, an order block, or a supply or demand zone. So first thing we want to do, we want to kind of, excuse me, we want to look at price, or we want to look at where price has retraced to, possibly within this premium pricing zone. So if we kind of look at market, we can see price is going up in a staircase type situation, is bullish. But as we can see, price has wigged back and it's tapped this level of demand here, this order block. And we can also notice on this 4-hour that we have some sort of an imbalance here. So for me, looking at that, that gives me a point of interest that I want to kind of capture this area here all the way down to the top of this imbalance. So this here will give me my level of demand. Let's go ahead and mark that up as a blue area. Now that we have our level of demand within 50%, we can go ahead and take off our Fibs. Now, what does the strategy say? After we found our level of demand or our point of interest, we want to identify the current trend and we want to wait for a break of structure. Okay, so let's look at that. As we can see, our current structure, we're in a downtrend. We have lower low, lower high, lower low, lower high. So we want to wait for a break of structure. Let's kind of look at price and possibly bounce off our level of demand. Okay, we see that price has come down and it's tapped our level of demand and it's starting to push back up. Okay, so let's see, this is our last lower high. So let's see if we get a break of structure. Okay, let's go ahead and mark that up. So on the 4-hour, we have a break of structure. Let's go ahead and notate that, 4-hour BOS. Now, what does the strategy say? Identify the current trend, wait for a break of structure, then drop to the 15-minute. Okay, let's drop to the 15-minute time frame, you guys. Okay, so now we're on the 15-minute time frame, and what does the instructions tell us? Identify the current market and wait for a break of structure. And as you guys can notice, as we drop to the multiple time frames, we're literally doing the same thing on each time frame. So, okay, let's identify the current market. We got a high, lower low, lower high, lower low. Okay, let's kind of see where the market is taking us. It's another lower low, I'm sorry. This is a lower high, and we can see that we have a break of structure here. We want to notate that. 15-minute break of structure. Okay, now what does it say? Wait for a pullback, then use the Fibs to determine a 50% or more retracement. Same thing that we did on the 4-hour, same thing we did on the daily. So now let's go ahead and find, let's wait for a pullback, and let's use our Fibonacci tool to determine where our point of interest is going to be. Okay. Look at price, it's going. All right, you can see that price is starting to pull back. So from there, what does it say? Wait for the pullback, then use your Fibs to determine 50% or more. So we want to take it from this swing low here up to the swing high. Now, let's look at this. We want to look at things within the premium pricing area. Let's kind of move our Fibs over a little bit. Okay, so we can kind of look at price. All right, so right off the bat, I see two potential points of interest. First one will be here, this level of demand that pushed price up. Let's go ahead and mark that one. And then we also have another order block here, which is a bullish, bearish, bullish, which is a continuation pattern. So we want to mark this level of demand as well. Now from here, we can see that price is below the 50% in both of these demand areas. Okay, let's go ahead and take our Fibonacci tool off. We've notated our levels of demand. And then after we've located our level of demand, which is our POI, it says what? Drop to the 1 minute. Okay. All we're doing, you guys, we're just following the strategy. Okay. So we've dropped to the 1 minute. And what does it say? Pretty much the same thing. Identify the current trend and wait for a break of structure. So we have two levels of demand that price can potentially bounce off of. Okay. Now with this strategy, we want to make sure that you do not get FOMO and that you do not react before you see the current confirmations within each time frame. Okay, so let's go ahead and see. We identify the current trend. We can see we have a high, lower low, lower high, lower low, lower high. So let's see what price is going to do. Okay, all right, let's look at this, you guys. You can see price is broken through lower high, lower low, lower high, lower low. And then we can see that price broke this last lower high on the 1 minute time frame. So what does it say? Find your point of interest, imbalance, order block, supply zone, or demand zone. Okay, so let's mark that up. Right here, price has given us a break of structure on the 1 minute. That's our 1 minute break of structure. Now, what does it say? Use your Fibonacci tool to determine a 50% or more retracement after your break of structure. So we've notated our break of structure. So as you can see, price started to retrace. We want to utilize our Fibonacci to determine premium pricing area more than 50%. So now, as we look at this, we notice that prices impulsed it from this last area here, and is actually broken through our 15-minute demand level, which is pretty much price taking out liquidity. So what we want to do, one of the things I want you guys to notice is you see this wick. It wicked up and then it came down before it impulsed up. You have this large engulfing candle, but you have this level of inefficiency, this imbalance. So what we want to do, we want to take this area right above this wick, and we want to move this over as our point of interest. Let's go ahead and take off our Fibonacci tool, And we can see that it's still within our level of demand. And we're going to mark this as our imbalance. And we're going to move this over just to give us some room. Okay. Now, that's our point of interest. Now, what does the strategy say? You want to take your entry on that point of interest and you want to give yourself enough room for your stop loss to breathe. So in this area, we can use our long tool for this area right here, put our stop loss right up under this liquidity area here. Give it a little room, possible 9 pip stop loss. And then what does it say? Let's go ahead and move this over. And let's see what the steps say. From here, go to the 4-hour time frame to set your target on the last lower high before the break of structure. Let's make sure we notate this, before the break of structure on the 4-hour. Okay. So let's go to the 15 minutes so we can actually spread this out a little more. Okay, now let's go to the 4-hour and let's take a look. Let's go ahead and remove this. So if you notice, lower high, lower low, lower high. This is the last lower high before the break of structure. So we're going to set this area here as our target for our TP. So let's go ahead and set this as our target. Move our long tool over. Target there, which is over 100 pips. Okay. Let's break this down so we can kind of look at this. Move this over so we get a clearer picture where our entry is. Drop back down to the 1 minute so we can kind of see price play out. There it is. Price wicks us in. Comes up. And as you can see, let's go to the 4-hour to see this play out. Once it wicked us in, it never gave us any drawback. Straight to target. And there you go. So like I said, you guys, with this strategy, it might take some time to play out. But if you follow each step with the confirmations within this particular strategy, it will maximize your profits and you can avoid, hitting your stop loss and things like that. Now, no strategy is perfect, but with the multiple confirmations on each time frame, you can ensure that it would definitely give you a better chance of hitting your target goals. All right. Hey, you guys, thanks for watching this video. See y'all on the next one.